Welcome, Accounting Boffins. You with Ashraf Patel and the team. And today we're looking at a bit of revision of sections that we've completed already. And what are we looking at? We're looking at the cash budget and the projected income statement. Remember, this is a revision question because we've done this section already. But remember, it is important to revise, especially because once we've done certain sections, to go back and see, do we remember, do we understand, and therefore revision is important. Okay, if you look at your cash budgets, again, important. If you look at your cash budgets, remember you're thinking cash. So you're looking at a cash budget anticipates future receipts and payments. Therefore, you're looking at your receipts and your payments. You think cash. And that's how you have to operate when you're looking at a cash budget. On the other hand, if you're looking at a projected income statement, now your thinking changes to what? It changes to your projected income statement will take into account all your incomes and your expenses. Right. So look at the difference. Let me illustrate the difference for you. Cash receipts, cash budgets, you're looking at all cash that you've received and cash that you've paid out. When you're looking at a statement or your projected income statement, you're looking at incomes that you have earned and expenses that you have incurred. Okay, so the next question actually answers what we're looking for. And the question says, state one difference between a cash budget and a projected income statement. Okay? So that's the first question. How do we answer that? Let's look at it. A cash budget, right, focuses on cash receipts and cash payments. Can you see what I've said earlier on? How it fits in? And this is an actual examination question where they ask you a difference between a cash budget and a projected income statement. What does it do? It shows you the surplus or shortfall of cash and the cash balance over the budget period. So what is the cash budget telling you? It's telling you for the budget period, you're either going to have a surplus of cash or a shortfall of cash for that period. And also it tells you what is your expected bank balance supposed to be after that surplus or that shortfall. So remember, a cash budget is a forecast of cash receipts and cash payments. Okay, now look at your projected income statement. A projected income statement focuses on incomes and expenses over the budget period, and it projects the profit or loss, includes only nominal accounts, cash and non-cash items, and takes into consideration all your adjustments. A lot, but let's break it down. 1. It looks at incomes and expenses. Number 1. So the focus changes to incomes and expenses. Number 2. It looks at the profit or the loss. Can you see? Totally different to your cash budget. It looks at profits and losses. Number 3. It only includes your nominal accounts. That means only items that appear in my normal income statement will appear in my projected income statement. Got it? Right. Number 3. And obviously, it also looks at, I think we're at number 4 now, it looks at non-cash items as well. And what would be your non-cash items? Obviously, items that don't involve the flow of cash would appear in my projected income statement, but not in my cash budget. And then also, it takes into account all your adjustments. In other words, it looks at incomes that you have earned, not received. Received is cash budget. Incomes that you have earned. Expenses that you have incurred, not paid. Paid items are your actual payments which feature in your cash budget. Okay, so this is a very comprehensive answer in terms of what you are expected to know in terms of a cash budget and a projected income statement. Okay. The next one said, list 2 items that would not appear in the cash budget. What are they? 1, your depreciation. Obviously, why not? Because depreciation is a non-cash expense. It's an imputed expense. What do we mean by that? It's an expense that does not affect the flow of funds. No money is leaving the business. Number 2, bad debts. Certainly, a debt that you write off as irrecoverable there's no expense in terms of money leaving. It doesn't affect the bank account. Therefore, what you need to remember is whenever you're dealing with bad debts, your entry is a debit to bad debts and a credit to debtors control. Clearly, no bank is involved, right? Look at your discount allowed. Same story. Discount allowed is the discount that we have given to our debtors. That means, yes, it is an expense, but it will not appear in my cash budget because we're not losing any money in terms of a cash payment. It's just that a debtor is paying you less than what they're supposed to pay you. By the same token, if you look at discount received also, no cash, the bank is not impacted in any way. And that is why it is important, accounting boffins out there, that when you're dealing with discount allowed and discount received, take into consideration what? 1, debit your discount allowed, right? Credit debtors control. Can you see it doesn't impact on your bank account? By the same token, discount received, credit discount received, debit your creditors control. Clearly, no impact on your bank account, right? And then obviously, drawings of stock would not appear in my cash budget because the owner is drawing trading stock. So clearly your emphasis tells you that if you're dealing with a cash budget, you're looking specifically at the impact on your bank account. Okay, next one. Explain why a business would compare the actual amounts received or paid against the budgeted figures. Right, again, what are we comparing? We're comparing actual against budgeted. What does it do? It helps to control your cash. That means your cash management is of critical importance here, right? Management can take corrective measures in addressing variances. Very important. If there are variances, significant variances between your actual and your budgeted, management needs to step in. And when they step in, they now take corrective steps. Why is my telephone account way over the budget? I budgeted for my telephone, just as an example now, 1,000 Rand, and I've spent 5,000 Rand. Clearly you can see, if this is the budget amount, that's your B, and the actual amount is 5,000. Management needs to step in. Is there abuse of the telephone? Is there something untoward regarding the telephone account? Or maybe the company embarked on an extensive advertising telesales campaign. Then it is fine. There's no problem with it. Can you see? So it doesn't necessarily mean that if it's way over the budget, there's a problem. No. You may have just decided that obviously it should have been in your planning, but maybe sometimes this happens. And if this has a positive impact on your sales, then by all means, it's a good thing that you spent over the budget. Right. Mismanagement and fraud can be exposed. Definitely. Definitely. If you're looking at the variances which attract your attention, it gives you an indication that something is going awry. You need to look at, is there a possibility of fraud? Is there a possibility of mismanagement? All of that means that when you prepare your cash budget, it is done with this purpose to ensure that one, it is a forecasting tool, and also it is something that once it is prepared, we refer to it on a continuous basis to see why are there variances, and if the variances is indicating mismanagement and fraud, we need to take corrective action. Okay guys, let's take a break and we'll see you just now. Welcome back, accounting boffins. Remember, we're busy with cash budgets. And again, a quick tip, when we're thinking budgets, remember all items of a cash nature would feature in my cash budget, and all incomes and expenses will feature in my projected income statement. Okay, here we go. We're told that Don is the owner of a gym shop. Use the information given to complete the debtors collection schedule for October to December. Right, so that we are told, remember the proviso that 30% of all sales in the gym shop is on credit. That's the first item that we have there. Okay, we are told that 30% of all sales in the gym shop is on credit. 60% of debtors pay in the month of sale, 38% pay in the month following the month of sale, and the balance is written off thereafter. Right, so this is important when it comes to your debtors collection schedule. What is critical, number one, is credit sales. We are told 30% of all sales is on credit. So we've got the first item that we need. Then the proviso, how are my debtors paying their bills, right? They're paying us 60% in the month of sale and 38% in the month following the month of sale. So clearly this tells you that you're receiving 98% of the amount that's due, and the 2% is your bad debt, which is written off as irrecoverable thereafter. Okay. So here we go. We're given October, November, December. There's my actual and budgeted sales figures for October, November, and December, right? First things first, I have to work out my figures that are denoted with a question mark. Okay, so if this is my November sale, and fortunately for you in this case here, they've worked out the credit sale for you for October and November, right? So you can see that's given. So if I'm looking at November at 30,000 Rand as my credit sale, and I know that in November I'm paid 68% because that was my proviso. Let's just verify that. I'm paid 60%. I'm paid 60% of that figure in the same month. So obviously, if you take 30,000 times your 60%, let's do that. 30,000 times your 60% will give you a figure of 18,000 Rand. So this figure here is your 18,000 Rand. Okay? And if you take your 30,000 again, and if you calculate the 38%, let's do that. Let's take the 30,000 times my 38%. Okay, that gives you a figure of 11,400. So here we go. There's the 11,400. Let me just take that out. Erase that. 11,400 is the figure that I'm looking for. 11,400. Okay, you can see here, there it's calculated for you in this slide here. You can see the figures, 18,000 and 11,400. Okay, so that was November. Now when it comes to December, your credit sales figure is not given to you. However, what do you have? Let's look at it. Here's my December. Here's my total sales figure. Right? What did we say? Most important, when you're looking at a debtors collection schedule, you need your credit sales. Right. So, firstly, take your 150,000 times 30%. Let's do that. 150,000. Okay. Times my 30% to find my credit sales figure, and we find that that's a figure of 45,000 Rand. Okay, so therefore, if we go into this thing, there's my figure that I'm looking for. There's the 45,000 Rand that I had to calculate based on my total sales being converted then to credit sales. Okay, step number 1. Now I know if that's my credit sales for December, what percentage will pay me? It was 60%. So obviously, if you take 45,000 times your 60%, here we go, and there we get a figure of 27,000 Rand. There's our 27,000 Rand that we require. All that we do now is we add 10,830 plus your 18,000 will give you 28,830, 11,400 plus your 27,000 will give you 38,400. So what have we done now? We've completed the debtors collection schedule. So this is the amount that we are expecting to receive from our debtors based on the provisos that we have in terms of how they're going to be paying us the outstanding amounts. Okay. The next one says, use the information to complete the missing figures in the cash budget. Okay. Now, we need to once again work out a missing figure, our cash sales for December, right? And how are we going to do that? Watch what we're going to do. We've got our total sales for December. Let's find that slide. We've got our total sales for December. Here we go. 150,000 was my total sales figure. So if 30,000 was on credit, then obviously sorry, let me repeat that. The total sales figure was 150,000 Rand, right? But 30% was on credit, so obviously the cash sales component would be 70%. So you'll take 150,000, let's do that, 150,000 times your 70%, and that will give you a figure of 105,000. Let's go and see. We needed that figure, and that figure here you can clearly see is your 105,000. Now, when you're looking at your cash from debtors, understand that your debtors collection schedule that you've already calculated fits into your cash budget. That means whatever you've calculated in your debtors collection schedule, those figures will slot into my cash budget. Let me show you. Watch here. Can you see the 28,830 plus the 38,400 is what we've calculated. So therefore, there you see it. 28,830 plus the 38,400 is what slots into my cash budget. So a question arises now. What if perchance you've made an error in the debtors collection schedule here somewhere? It doesn't matter, because in accounting we don't have a double penalty. So whatever you've calculated in your debtors collection schedule is what is slotted in to your cash budget, and you will notice from marking guidelines that this is marked as a figure that looks like that, which we call a method mark, meaning whatever you've calculated there, if you transfer it correctly into your cash budget, you're going to get credited for that amount. Okay. The next item we have to work out, I think, is our gym, income from gym members. Let's have a look at that. What was the missing figure? We had that one. Okay. So the next one we have here, they're telling you Monthly gymnasium fees are 420 Rand per member. On the 31st of October 2020, there were 80 registered members. Duan expects the membership to increase by 25% during December. Okay, so very simple. What we're going to do here is we'll take the 80 members, right? And we expect it to increase by 25%. So first things first, we say 80 times our 25%, which will give you 20 members. So obviously, you're expecting to increase to 100. It's your 80 plus your 20. So it's 100 members, and they are expected to pay 420. So obviously, if you take that figure now, and you say 420 times 100 will give you 42,000. So clearly you can see now that there's the 42,000 that you expect to receive in December. So what have I done? I took my existing membership fees. I took the proviso that we expect them to increase by 25%. So we were 80 members, right? Let's just write this down so you can see it. We had 80 members, plus we were supposed to increase by 20. So in total, we now should have 100 new members, and each one is paying 420 Rand, therefore the 42,000. Okay. Coming to the rental, we are told that we expect our rent will increase by 8% with effect from the 1st of December 2020. Right. Now, if that is what our expectation is, let's look at our rental figure, because we need the rental figure, we need this figure here as our missing figure. So we now have the rental for December. Watch this. We have our rental for December to be 10,638, which is equal to my 100%, which was my old rental, plus the increase of 8% to give me 108. Do you see that? What are you expected to calculate? You are expected to calculate the rental for the previous month. That means the month before the increase. Obviously, that works out to 100 is equal to my unknown. And if we do this in terms of our calculation, this is what we do. We say 10638, which is that, times 100, okay, divided by 108, and that will give me a figure of 9850. Clearly you can see here that that figure is your 9850, where you had to work backwards. Right? Can you see that? You had to work backwards. You were given the rental increased figure, you had to work out the rental prior, before the increase. Right? While we're at it, if for perchance, let's just change and amend the question as we go along, because these are the types of questions that examiners ask in the accounting paper. If you were given the 9850 and the 10638, and you were then asked to calculate the percentage increase in your rental, how would you do that? Very simple. What you'll do is, you'll take the 10638, let's do that, 10638 minus 9850 will give you an increase of 788 times 100 divided by 9850, and clearly you can see you're getting an 8% increase. Right? You're getting what we call here an 8% increase. Let's write this down so you can see exactly what we went and how we went about doing it. We said, firstly, take your new rental, which was 10,638, right? Minus the old rental. Remember, we calculated it to be 9850. There we go, 9850. So step number one, take the new rental, subtract the old rental. That's the first step. 10638 minus 9850. Let's do that again. 10638 minus 9850 will give you a figure of 788. So this answer here is 788. What is the 788? The 788 is the increased rental in terms of rands. Remember I said the question wants to know by what percentage did you increase your rental. Okay, now once we have the increased amount, you take the 788 over your old rental. Your old rental was 9850, and then you express it as a percentage. So this is what we do. Take your 788, which we have there, times 100, okay, divided by 9850, and this will give you a figure of 8%. In other words, it means that your rental increased by 8%. Clearly you can see that this type of questions expects you to first work out the difference between the 2 years and then take the difference over the base year. Take the difference, which was 788, over the base year. That means the starting, and then multiply it by 100 over 1 to give you the percentage increase in your rental. Okay, so these are types of questions that you will have to work out in the exams. So look at the information that's provided to you, and based on that information, do the correct answer. Okay, we now look at, if we go back, so we now have fitted in all the figures that we needed, right? So we've got our rent income, which we calculated to be, where was my rent income? 9850. There's the 9850. All that we do now to complete our receipts section of my cash budget is we add all the components. Can you see that? You add all the components. And here you go, you add all the components. Let's do that. So we have 70,000 plus 28,830 plus 33,600 plus 9850 plus 80,000 will give me a figure of 222,280. There we go, 222,280. There's my correct answer. That's my total receipts. Now, a question again. What if you have made a mistake with one of those figures? Perchance you got one of those calculations wrong. This would still be what we refer to as a method mark, meaning you're getting a method for the operation. You've added a few items that were correct, maybe one or two incorrect, but the fact that you added, now that is important. The method mark is related to your operation. If you subtracted anywhere in here, definitely you would not get the operation mark. And the same applies to December. You add it, and that will then give you your total receipts. Okay, guys, I'm sure I've whet your appetite with regards to budgets and everything related to budgets like projected income statements, etc. If you want to know more, the place to be is to be with us. Stay with us. We'll see you just now. Right, welcome back, guys. Remember, we're doing cash budgets. We said budgets, you think cash. When you're looking at your projected income statement, you're looking at incomes and expenses. Okay, so now let's continue with the question that we have here. Remember, we said when we're looking at budgets, what we're looking at is the actual and your budgeted figures. And then obviously, based on that, you now have to make certain calculations. Okay, so this one here says, all goods are purchased on credit. That means if you're looking at your goods, all your goods are purchased on credit. Okay, and what else do we know? That how are we paying our creditors? Let's see. Creditors are paid within 30 days to receive a 10% early settlement discount. Okay, so in this particular question, they want to know how much are you going to be paying your creditors, right? Okay, so step number 1, determine your credit purchases. But in this particular example, all the goods are purchased on credit, so your entire purchases amount is a credit purchases, right? So if we take the first figure here and we say our creditors are paid within 30 days, so if you bought in October, you're going to pay in November. So you start off with your 58,000. Let's do that. So we start off with our 58,000. Here we go. 58,000, which is our credit purchases, times. Now, remember the question said that you are entitled to a 10% settlement for settlement discount for early payment. So obviously, when you're doing this calculation, important, you take your 58,000 times what percentage are you going to be paying? You're only going to be paying 90%. So therefore, 58,000 times your 90%, and that gives you a figure of 52,200. Clearly you can see here, that you have a payment for October of 52,200. Right. Now, if you take this year into consideration now, we have to work out the next month, and we're working on 62,000 now, because obviously the 62,000 which you purchased for in November will be paid for in December. Therefore, you start off with your 62,000. Here we go, 62,000. Remember we said we're paying 90% of the amount. Therefore, that gives you a figure of 55,800. And here you can see, here's your 55,800. So those are your payments to your creditors. Okay, just a quick one on this one here that you need to take note of. Take your purchases figure and separate it into cash and credit, because it's your credit component that you need for your creditors' payments schedule. Right? Okay, in other words, in this particular example that we are doing currently, all the purchases were on credit, so it was a figure that we had to work with. But if you are given total purchases, split it up into cash and credit to find out how you will be paying your creditors. Okay, next one says, here's our information. Our wages and salaries, it says calculate the percentage increase in salaries and wages. Okay, now you can see this is almost similar to the one that we alluded to in the previous segment. But anyway, let's do this together, right? What do we do? Step number 1, take your 25,800. 25,800 minus the 24,000 will give you the percentage increase in rands, which is 1,800. Okay, now, there we go. 25,800 minus your 24,000 gave you the 1,800. Step number 1, work out the increase in terms of rands. Right, now, step number 2, what do we do here? Take your 1,800 over the initial month, that means October, over 24,000, multiply it by 100 over 1 because you want the percentage increase, and therefore, this is what you have here, 1,800 times 100 divided by 24,000, and this will give you a figure of 7.5%. So here you go, there's your answer. The percentage increase was 7.5% from the previous month. Okay. The next one says, explain why you think the workers should or should not be satisfied with this increase. Again, whenever you are looking at an increase of wages and salaries, the question should direct you as to what is the inflation rate. So if we take the current inflation rate, which is at about plus minus 3.5%, right? Then our answer will be, it's a fair increase greater than the inflation rate, the business was able to give an increase in spite of the low bank balance. Now, what I'm saying is compare your increase with the current rate of inflation. And that is important because the answer changes completely. If we say that my inflation rate was, say, 9%, right? Now, this answer obviously would be an unfair increase. Why? Because it is below the inflation rate. So therefore, the workers would be dissatisfied. So always compare your wage increase to your current inflation rate in the economy. Okay, now again he has certain areas of concern, and in each case we have to give Doan practical advice to address the concern. Let's look at the first one. Our fee income is at 33,600 and the actual is 23,520. So the budgeted amount is that and the actual amount is 23,520. So clearly you can see with regards to the fee income, the club was not able to collect all the fees from its members, right? Only 56 of the 80 members paid their fees, right? 30% of members did not pay their fees. Clearly you can see that. Look at this here. If you take your actual figure of 23,520, let's take that figure, 23,520 divided by 420, and you can see that only 56 of the 80 members, remember we had a total number of 80 members from the previous part of the question. Remember we said we had members and then there was an increase of 25%. Remember the 80 plus the 20. So therefore you can clearly see here now only 56 members actually paid their fee income. In other words, only 56 of the 80 members paid their fees, right? So if you take 56 over 80, let's do that as well. So if you take 56 times 100 divided by 80, you can see that 70% of your members paid their fees, and clearly 30% of the members did not pay their fees, which is a concern, definitely a concern. Okay, now, what's the solution to our problem? Number one, improve the collection policy. That means make sure that you have a proper policy in place with regards to the collection of your membership fees. Provide incentives for early payments. Do not allow members to use the facilities if the fees are not paid. Right? So one of the easy ways of doing this is to ensure that maybe ask your members to sign debit orders so that you know on a monthly basis the membership fees will be paid. Right? Also, for those members that are settling, give them an incentive. One of the incentives you could say is if you pay up for the year, you get 1 month free. So in that way, you know, although you're sacrificing the 1 month, but you're going to get the bulk of your fees in, right? And then obviously, the most difficult part is to tell members, sorry, if you haven't paid, you cannot use the facilities. Okay, next one. Right, the next one we're looking at is the telephone. Remember, your budgeted amount is 5,000, but if you look at the actual amount spent, you find that you spent 8,460. So clearly there's a variance, right? There's a negative variance because you budgeted 5,000, but you spent 8,460. Okay, how are we going to address this concern? Number one, investigate the usage of the telephone, right? Obviously, check to see why is the amount that we have spent more than the amount that we have budgeted for. Just a word of caution here, people. Very often you think that the budgeted figure is a thumbsuck figure. You just snap it from the air and say, okay, we're going to budget so much. No, the budgeted figure is actually based on previous usage, right? So based on historical evidence, you know that at an average, you should budget for plus minus, what was the amount? You should budget for plus minus 5,000 Rand for your telephone, right? So clearly you can see here that we overspent on the budgeted amount, or it was under budget, or a negative variance, right? Obviously, this is not well controlled at all. Okay, so that's the situation with the telephone. So, what we said, how are we going to solve the problem? We're going to investigate the usage of the telephone. One. Number two, check if there is abuse and improve the internal controls such as using PIN numbers or codes. Give each member or each employee in that department a PIN code. Let them enter the PIN code to make a call, so you know if there's any query, you can identify the call to a specific person. And clearly you can then identify any abuse or the use of the telephone for personal uses or for personal benefit. Right. Okay, then budget more realistically if necessary. If you find that after you've conducted your investigation that there was no abuse of the telephone, everything that was done was kosher, hunky-dory, above board, transparent, meaning that you have under budgeted, because it could be that there was a substantial increase in the price of calls, right? So all of this must be taken into consideration when you are budgeting. So important, make sure that you budget more realistically if necessary. Okay, so there we're done with the telephone. Let's look at the next one. So we sorted out the fee income. We sorted out the telephone. We now move on to maintenance of training equipment. Right, now watch here. Interesting one. We budgeted 13,000 Rand for the maintenance of training equipment, right? However, we only spent 8,200, right? Clearly now, one would say, wow, man, what a saving. We budgeted 13,000, but we only spent 8,200. So this is actually a positive variance, right? Why? You spent less than what you budgeted for. However, watch. We underspent or we over budgeted, right? Remember I said a negative variance. We did not make effective use of the budget. That means you allocated 13,000 Rand for the maintenance of your equipment. You were given that budget, but you did not spend it, right? It could be that we neglected to do the necessary maintenance. And this is serious business. Why? Because we all know that equipment in a gym needs to be maintained at peak performance because of its usage, right? So, although prima facie, at first sight, it appears that it was fantastic because we saved money, but that's not the point. You've budgeted an amount of 13,000 Rand, right? But you've only spent 8,200. Now, how are we going to solve this problem? Number one, investigate the contract for maintenance. Look at the contract that you have in place. Are they coming in on the regular basis like the contract stipulates that you must do your maintenance? Number one. Number two, it's unwise to neglect this, as defective equipment can cause physical harm to members who can sue the business. Very, very, very important. Like I alluded to early on, people are coming in using the equipment in the gym. That equipment has to be at peak performance at all times. Therefore, your maintenance needs to be on point. If your maintenance is not done, you can have defective equipment. And with defective equipment in a gym, you can have serious consequences where there could actually be a loss of lives, or it could also mean that people get hurt in the process. Obviously, the gym is opening itself up to being, there's a possibility of being sued or being taken to task for faulty equipment. Effective maintenance must be done to improve the lifespan of the equipment. Yes, very, very important. If you do not service your equipment on a regular basis, clearly you're reducing the lifespan of that equipment. And we all know the costly nature of gym equipment. If we do not maintain and keep it at its perfect performance, you're going to shorten the life of that equipment, and it would mean you have to replace the asset within a shorter time than you're actually supposed to do so. And obviously, in the long run, this may look like a saving. Let's look at it one more time. Here, if you take this figure here of 13,000, right, minus the 8,200, you'll see a saving of 4,800. However, that saving of 4,800 in the long run could be very, very costly, because the equipment that you're replacing could run into thousands, if not hundreds of thousands of rand, if you do not service your equipment on a regular basis. Okay, so this means now that we have come to the end of our lesson. If we recap, remember, one is to be able to draw up a cash budget, to draw up a projected income statement, or to draw up parts of the cash budget or the projected income statement. And also, do not neglect this aspect of the question, the analysis and interpretation of cash budgets. Like you've seen when we just did the question now on the gym fees, on the telephone, and on the maintenance. Okay, guys, I think we've done a good question to show you how you should approach these questions when you do them as activities or in the exams. Keep on practicing. Make sure you work as many questions as you can, because remember, it will only get better. And obviously, you need to have that temperament when you walk into an accounting exam. So, from myself, Ashraf Patel, and the team, we want you to ace your exams, because we know you will always be our shining stars. Accounting, shining stars. Until the next time, be good. Goodbye.